Hello, my name is Janice Rice, and I'm the founder of Game Consulting. And I wanted to talk a little bit about this latest tab that I have on my website for working capital and for financing, and just a little bit about what we've done over the last year and some of the programs that we have found. So we started a new business for commercial lending about a year ago because we saw such a need for help in this industry with navigating the different requirements and what people's expectations were versus what actually happens. And so I wanted to do a video basically to show you how to get working capital for any business and build business credit too, and the difference between what people like the expectations and what is real, what you can actually expect, and how you really can get working capital for any business, not just the established bankable ones. So the first thing that we're going to talk about is just the different types of financing, so you'll understand where you fall. And so traditional financing are usually bank-issued loans, lines of credit, SBA loans with standard rates and terms. Bank lenders generally have a conservative risk appetite. And then examples of alternative financing are short-term unsecured working capital, short-term equipment leasing, merchant cash advances, receivables factoring, things like that with unconventional rates and terms compared to traditional lenders. And then alternative lenders generally have a greater risk appetite, and this is reflected in the loan rate and terms. So if you think of qualifying for funding as a bar stool with 3 legs, traditional lenders need all 3 legs to help you. Often they need even more. They need credit, cash flow, collateral, clean financials, 5 years time in business, perfect debt ratios, no bankruptcies, and it's helpful to be a homeowner. And hopefully you're not in a risk industry. Your business can't fall onto one of the bank's preferred industries like construction, logistics, trucking, online businesses, coaching businesses, real estate investing, self-employed individuals, or any business that is not a common brick and mortar business is often considered risky business. This is kind of changing because of the virtual and e-commerce world. But they usually like you to have an office front. The brick and mortar thing is still really real. Alternative lenders only need 2 out of 3, or even 1 out of 3 of the barstool legs to qualify applicants. Normally, the amount of funding applicants can qualify for is 6% to 11% of annual sales revenue. So in other words, you have to have about $500,000 to $600,000 in annual sales revenue and have been in business for 12 months just to qualify for a $50,000 loan. Having good credit helps, being a homeowner helps, no bankruptcies in the last year, and no more than two short-term loans with other lenders. So again, you still have to have revenue. You still have to have time in business to qualify for a $50,000 working capital loan. All right, so all lenders need at least 1 leg. I mean, that seems kind of common sense that you can't sit on a bar stool that has no broken legs or no legs and they're all broken. So they need at least cash flow, collateral, and or credit. When you are just forming a business, there are no legs. There's no time in business. There's no sales revenue, no personal credit without other supporting factors does not help, nor does home ownership, lack of bank, like the stuff that helps you with personal does not help you with business. So additionally, the business has no collateral because there are no tangible items. There's nothing to show yet. Most businesses in that phase don't even have a tax return yet. Definitely no revenue. So the $1 million question is, how do you get the money to start a brand new business? So borrowing the money to start a brand new business, like it's the chicken before the egg, because no banker is going to give you money unless you've already generated money. So how do you do that? According to a survey by Warwick Business School, most startup finance of small and medium-sized enterprises comes from 66% personal savings, 12.5% friends and family, bank loan, home mortgage, nothing, equity investment. So clearly the most viable strategy for most brand new business startups is to use personal savings, right? Except most people in 2021 don't have personal savings. So then how do they do it? Well, the best course of action is to intelligently apply for additional personal credit cards to start or grow your brand new business. That is what I did with Yame in the very beginning. That was how we got started. I borrowed money and it was all on personal credit. It was not on business credit. I was not able to get a business credit card. So that's what we did. You need a combined total of $5,000 to $10,000 in personal credit lines and or personal savings to implement the strategies that, that you need to. And you need multiple credit cards to have a high credit limit to work with. So be responsible with your choices. This is absolutely positively not a recommendation to borrow money just to borrow money. This is a recommendation for working capital to fund and grow a business idea. Again, this is an investment, not borrowing money to have extra cash. Okay? One more time, be responsible with your choices. So important. Now is not the time to apply for business credit cards because you're going to get denied and it's going to hurt your business credit. So correctly applying for business credit cards comes in this next step. So use your personal savings and credit card buying power to position yourself to receive even greater funding amounts. And you can do this by working with my partners at Fund and Grow. So I've gone through this program recently. I have a video series on it. Me and my business partner both went through it. It was a great decision. They specialize in helping brand new businesses access 0% interest business credit lines for all business and investing needs. This is the product that we were missing because so many people were coming to us for financing, but they didn't have any of the three legs. And so it was impossible for us to help them. And I was turning away all these people because we didn't have a solution. Now we have a solution. Fund and Grow has been around for 10 plus years. They are part of the 4% Business Survivor Club, which I did another video on in the YouTube channel. They are A+ rated by the Better Business Bureau. If you have average to good personal credit, odds of receiving funding in 14 days are much more favorable. Everything went really smoothly for us. I was really impressed with their customer service. If you have a high enough credit limit, consider working with Fund and Grow now. Don't even go out and try to do any of this yourself. It's time consuming, it's stressful, and this is so much easier. Definitely worth it. You can learn more by watching Ari's webinar, which I've included access to below. So I wanted to kind of wrap this up by asking you, where do you fall? Do you have good personal credit, but no barstool legs? Then I recommend watching Ari's presentation, watch his webinar, learn more about it, ask questions, watch my Fund and Grow week by week series. And then maybe you're a little bit further along. Maybe you've been in business for 1 or 2 years. Do you have 1 or 2 of those legs? Do you have cash flow? Do you have good credit? Do you have collateral? Do you think that maybe you're a step above from Fund and Grow? Reach out to me. I can help you. I can help you figure out where to go next. If you need working capital, schedule a call with me below and we can figure out where you fit. You might even qualify for an SBA loan or, real traditional financing. But you don't know unless you get more information, right? So thank you for watching this short presentation and enjoy the rest of our day. Bye for now.